Welcome to Policy in Wonderland. I'm your host, Evyatar Amira, and as you already know, you can call me Evie. In Policy in Wonderland, just like Alice, we are going to explore and see the wonderful world of insurance, InsureTech, and everything that's connecting to this amazing ecosystem. In Policy in Wonderland, you will meet startups from all over the world, key figures, brokers, and more. So without further ado, we travel today to Las Vegas. And I want to invite my guest to join me as we go down the rabbit hole. Please welcome Valkyrie Holmes from Faura. Hey, Valkyrie.
Hi, no, thank you. Thank you for having me.
Thank you for joining. So let's start from the beginning. Could you please tell us a bit about yourself, your background, and especially because you have interesting background in your NASA and SpaceX and all this CV. How did your background and experience influence the decision to tackle this particular challenge?
Yeah, absolutely. So I started off in pretty traditional data science, working for space tech companies. I was always kind of interested in space, and I think every STEM kid, math and science kid, is kind of intrigued by space. When I got the opportunity to work for NASA's SEAS Institute, I just kind of took it. And was looking at low Earth orbit satellites and trying to map out trajectory of things that were entering the Earth's atmosphere. And then I started working for SpaceX on their Falcon ABI team. So basically, what do companies need to measure to get into space? What do we have to design and really account for to get them into space? All the logistics that surrounded that. That was our team. And back in high school, I did a couple of hackathons on climate risk in general, kind of like wildfire suppression. And it really got me interested in the environment of sustainability and climate tech and all of those different adjacent fields. But didn't really get a chance to like truly work on it until I got this grant from this fund called 776 that basically just helped fund my sustainability journey for 2 years. They just said, hey, work on this full time, we'll support you, we'll give you whatever you need, and then it was kind of off to the races. Um, I think like it's interesting kind of thinking about the environment that I come from, because kind of like you said, I was born and raised in Vegas. I'm typically in Vegas, and a lot of Vegas is not really like very education centric. But I think I grew up with like friends and family that just like really wanted to do good and that wanted to succeed. And then being in these like environments where it's everyone is working towards this crazy mission of getting people into space, it also really fuels you to want to give back and want to make an impact. So all these different things coming together, I think, is what brought us here. But yeah, and then we come to Fora about 2 years after that program starts.
What inspired you to focus on the issue of climate and natural disasters in the insurance industry? Because it's not like a typical industry that you say, okay, I want to explore the insurance one.
Yeah, exactly. I mean, so I was interested in climate because I got fascinated with the history behind wildfires. So, for those of you who don't know, at least in the US, there was a big fire that happened in 1910 that basically the government looked at that and said, okay, it killed a couple hundred people, it burned millions of acres. Let's throw the whole kitchen sink at it. And so they put a bunch of funding into forestry and vegetation, just like the motto was no wildfires by 10 a.m. So the government basically put out every wildfire in sight. But that's really bad for the forest because you need kind of like natural small wildfires to burn away some of the dead vegetation to allow new things to grow. So for the last 100 years or so, we've just been stopping wildfires, and now we have temperatures rising because of global warming and drier seasons because of the same thing. And then now we have all this excess fuel that are currently in our forests that are ready to be burned. So not only are wildfires burning hotter and more frequently, but it's easier for them to spread because of that dead vegetation. And so I got super interested in that element of wildfire, and then that naturally led me into exploring other natural disasters and the impact that they had on communities. And I kept coming back to this idea that, okay, homeowners at the end of the day are really just like cost is the biggest barrier to entry. Like you have to spend money to mitigate the risk on your property. You have to spend money to get an inspector to come out to do work on your property. Like there's all these different barriers that stop a lot of people in their tracks and end up, being the reason that they lose, their most valuable asset, their property. And so we started thinking about, okay, what are the legacy stakeholders in this general realm of climate risk that if we partnered with them could create a significant amount of impact without being such a burden to the homeowner, in fact, helping the homeowner. And we came upon insurance. And insurance was kind of one of those things where we saw, okay, homeowners and insurance companies are thinking a lot more about each other recently. They're pulling out of states like California, and they've already kind of taken that route with Florida. And it just keeps getting worse and worse and worse. And that was kind of the impetus of us going the insurance route. But we just think that there's a lot of potential there for both policyholders and insurance companies to be able to make a bigger change.
But why focusing in the beginning on homeowners? I understand why, but because as you mentioned, you are focusing right now on wildfires and fire in general, but on wildfires. And for example, you have, if I remember correctly, Cal Fire that are focusing more on the nature side, if I can mention that. Why not focusing on the natural side, like much more impact in a cumulative way?
Yeah, so we actually tried more like community organizations and working with Firewise councils in the beginning. And there's a couple reasons why that didn't really prove to be fruitful for us. The first reason was governments move slow, even slower than insurance companies. And governments, like there's all this approval, especially for community organizations that are completely volunteer. A lot of these, there's so much red tape in the industry that it was just hard to get anything done and really create a lot of that value up front. And we were already collecting all this data that these communities basically had access to in a specific way. So it just like didn't seem like it would be the best fit. And then the other thing was that homeowners at the end of the day are hit the hardest when a disaster comes through. Like we're seeing billion-dollar losses from governments and agencies and insurance companies across the board, but at the end of the day, a property for an insurance company, for an underwriter, is one property out of, thousands on their book. So, but for a homeowner, that's their property, that's their most valuable asset. And so for us, it was, okay, how do we create the most impact for the person that is actively spending the money to mitigate their risk and giving us data that ultimately informs better underwriting? How do we reward them? How do we provide more incentives there? Because at the end of the day, there are no incentives there currently, and they are always at the bottom of the chain.
What exactly for serve to the homeowners? What they offered for the homeowners?
Yeah, so for policyholders, and this depends on the state and like legislation, and there's a lot of different things being passed around this, but for a lot of policyholders, if they understand their risk and take steps to reduce their risk.
Sorry, but the homeowners is taking Faura from via the insurance agent, via the insurance carrier. How we approach to Faura? How we get the link for your application?
Yeah, so it's basically like the underwriter says, okay, this is a high risk property. We need more information. They ping us our platform via API or on our actual platform, and then we send a text to the policyholder with a link that walks them through their assessment.
Okay, so take me for the homeowner got the SMS, and then what?
Yeah, so you as a homeowner basically would get a text that says, hello, this is, State Farm or whoever we're working with. It's a white labeled, so it would be like it's coming from your insurance company. It says, hey, this is State Farm. We need a little bit more information about your policy before we can fully, sign on. Click this link to complete your short assessment. You click the link. There's no downloads involved. It just pulls up on your phone. And then from there, you start walking around your property for 5 to 10 minutes, collecting pictures and videos of your most potent risk factors. So it varies for, per natural disaster, but it could be anything like debris on your roof if you're in a wildfire zone, or if you have storm shutters, or your foundation is crumbling in an earthquake-prone area, or like it varies a lot between material condition and any other characteristics based on resilience that we're gathering. And so you walk around 5 to 10 minutes, taking all those, answering questions and filling out the assessment. And then at the end, both the underwriter and the policyholder get their own version of a report. So you as the homeowner would get a report that says, hey, this is your risk. These are personalized action items to you that help you reduce your risk. And here are the incentives associated with them. It could be anything from a premium discount to free home services to like these are contractors and products in your area that can help you perform this if it's like a free or low cost DIY kind of thing. Either way, the goal of it for the policyholder is to make it as streamlined as possible for them to get to from an F score to a C, if that makes sense. So
yeah, totally. But okay, so what differentiates you between, from example, Eagle View or Better View? I think Better View. Because as you mentioned, you're only focusing on the external, right? Or
not necessarily.
Also in the okay. So
yeah,
also
so
in the interior.
It depends on the natural disaster. For wildfire, a lot more factors are going to be on the external portions of the home, but for areas like flood, and hurricane, where significant water damage is more likely to impact the property, we need to check for water damage on the interior of the home. So it's checking ceilings, it's checking more under the foundation if there's a flood-prone area and they have basements, like sump pumps, things like that. So it's really customizable for the disaster in terms of the actual things we're looking for. But a big question we get asked on in terms of like the distribution and like differentiation between a lot of companies is we are specifically focused on the survivability of a property. So a big thing we like to say is it's not just about which properties are going to be hit by a natural disaster, it's about which ones are going to survive. And in those cases, companies like Betterview and Zesty and these big like satellite and aerial imaging companies, they're using climate models that tell you about the general zone of risk, and less on whether this property is going to be the most profitable, the best margin of risk for that specific disaster. So that's probably the biggest differentiator is we're supplementing a lot of that traditional data that you would get from a typical vendor.
I loved when I saw your demo on the MetaProp acceleration program. There was a slide. What we do is beyond what is available, but you had like a line of homeowner education.
Yeah.
And I can say it's pretty rare to see that, because all about the InsureTech focusing on the in-market or what kind of technology we have. Can you elaborate, please, about the homeowners education?
Yeah, absolutely. So, I mean, when I was touching on kind of what we're doing to streamline the process for homeowners, a lot of that revolves around the education and resources that we're providing that's personalized to the assessment that's being taken. So if you're in a wildfire zone and you take a Faura assessment, you're getting products and services and resources that are customized to your property and action items that are linked to the best things that would reduce the risk on your property. And a lot of that, when a policyholder takes a typical digital, inspection, basically, or like walks around their property and does that for a typical insurer, they basically complete the assessment and then they get a check mark at the end that says, hey, you're done, and nothing else. So it kind of leaves a lot of homeowners being like, okay, I did this. What's the next touch point? What did this even mean? And they don't get confirmation on that until their policy is non-renewed or canceled, or they somehow get it signed. Like it's not a very transparent process from they collect this information and then they, get something out of it, right? And so that's a part of what we mean by, homeowner education. It's, okay, you're doing this, you're collecting this information, here's what it means for you, and here's a path forward that directly benefits both you and your insurance company. Because at the end of the day, if a homeowner is reducing the risk of natural disasters on their property, it's reducing the risk to everyone in their circle, both the insurer, the government, real estate professionals, and the homeowner. So that's kind of what we mean. Yeah.
How the underwriting looking at Faura? Like, okay, right now we are realizing something that we didn't realize yet, and sorry for all the risk adjusters, and this is not something that I will get from the risk adjusters.
Mhm.
So
Yeah.
how do you react to Faura?
Yeah. So in terms of kind of like where we're plugging in and what that typically means, when you're looking at traditional climate models and pinging things like Hazard Hub or like a CoreLogic, Verisk, ARR model, those are giving you, okay, on a score of 0 to 100 or 1 to 10 or whatever it might be, this is how likely a disaster is to impact this specific area. But it's not honing in on the actual property itself in the majority of cases. It's not honing in on, like, yes, a disaster is to impact that property, but if that property is fully mitigated and has all of the characteristics for resilience, it's not going to be impacted, or it's going to be severely, you're severely overestimating the amount of impact that that property would have, and therefore having to pull out of entire markets because we don't understand that margin. So when we're interacting with an underwriter, it's turning a one-dimensional risk into more of like a two-dimensional risk, where it's, okay, we know this property is high risk, but how high risk is it actually? Like, is this going to be a client that I have for the next 10 years? Or is this property going to, the next time a wildfire hits it, it's going to be gone tomorrow? And so that's the quantification that we give to underwriters, either pre-bind, post-bind, wherever they typically factor in that inspection process. And then we're amending whatever they typically get with traditional climate models with that extra that next step, essentially.
There's something that interesting me that because you are dealing with big and catastrophic damages, right? All the natural risk.
Yep.
What were some of the initial challenges you faced when trying to quantify natural disaster risk for insurers and homeowners? How you deliver the problem? How do you deliver that you are the right person to engage with this kind of problem?
Yeah. I mean, initially it was kind of putting together our insurance knowledge and getting people behind us that really understood they understood the insurance space, and they understood how climate plays into the insurance space. So early on, we joined a lot of different groups, like Insure. They're a nonprofit that unites insurance professionals with climate professionals and finds the intersection. And that was super helpful for us, just getting in the weeds of what all this means and what the different infrastructure looks like. And then we're in other organizations like ITA, it's the InsureTech Association, and a couple others. We participated in a lot of different webinars and talks and things like that, just to get ourselves familiar, because, we were coming from outside of insurance, applying, my co-founder and I, we've had data science experience for now, it'll be like 15 years combined. So from that lens, it's taking what we know about data science and what we know about modeling and what I know about satellite imaging, and how companies have typically used them in the past, and then applying that to specifically the climate and insurance intersection. So that was kind of where we first started, and then we started getting advisors on board. So Bob Frady, previous CEO of Hazard Hub, he's on our board, and he's been super crucial in just understanding more of the landscape. Same thing with Max Drucker from Carpe Data, and Jordan Hooper from Flyreel. So all big companies that were either acquired or are still serving millions of policyholders today, and have some element of either getting the right data to solve the problem, using the right climate modeling to solve the problem, or the right delivery mechanism to solve the problem. Um, so all of those different things together really helped us cultivate an audience.
So right now we are focusing much more on the wildfires.
We initially were, and now we've expanded into the majority of natural disasters. So we have wildfire, hurricane, convective storm, flood, hail, and quake, are our current tool set.
Which is the hardest hazard to recognize or to analyze?
Yeah, I mean, earthquake, I think, will always be hardest because it's the majority of it is relying on the foundation and, designing a tool that a homeowner can kind of use and understand to the point where they they can recommend action items to complete, and we can explain that to underwriters. I think a problem that we ran into early on, and I'm still like navigating a little bit, is just the education on what underwriters even need to look for, right? Because like underwriters aren't necessarily in the training course. They're not getting, here are all the things that are wildfire, hazards, and like hurricane and flood are a little bit more fleshed out now, but it's really dependent on where you are and where the capacity is. So just getting that education up front is super important. But yeah, earthquake I think will always be the hardest.
You said one of your, I think on your white paper that I saw on the website, by the way, very cool one. The numbers are, it's not important how much it's not like I will see the numbers of, especially in the catastrophic damages, but the numbers are truly amazing. Like for your example, it's like 40% homeowners will have a disaster.
Yeah, 40% of people will be impacted by disaster in the next 3 years.
In that kind of information, as insurer, maybe I will step down and say, okay, let's see how to evaluate the risk, but not take the risk. Even I have a new startup called Faura, sorry, and how you engage or how you mitigating that kind of speculative, that you are the right person. Again, sorry for asking that again, because you are dealing with a big problem and you don't have that kind of, in general, not specific you, the data that this is the kind of analysis that will prevent or mitigate the risk for these homeowners in this specific area.
Yeah, and that's the thing. We have so much data that lends a hand to which properties and materials and condition and all of these different factors, how these elements correlate with resilience and therefore correlate with profitability. And I think like I bring this up in the majority of conversations I have, but I think it's important just because we haven't really needed to innovate in property for a long time, because properties are a pretty stagnant, resource. They don't change very much year over year. If we're underwriting a property, the most we're going to, have to change is if they put a trampoline or a pool in, or they put an extension on the house. You know what I mean? So like we haven't really needed to tie resilience into profitability, because before it was either I'm writing a disaster, a home that doesn't have any disaster risk, or I'm not, basically. But now with the amount of properties that are actually in that like low disaster risk category, that category is dwindling slowly. And there's less properties that insurers can point at that says, oh, this is like a property that I used to insure, but now it's like a 5 or 6 out of 10 risk. Now we need to be able to quantify those margins. And so there's a ton of data that is able to showcase, okay, based on like historical information, we know that this kind of construction type, we know that this kind of material, we know that this level of vegetation is going to lend us a hand in surviving a wildfire or a hurricane or whatever it might be. We know that that's going to correlate with a reduction in risk. And so therefore we should insure the properties that have that reduction of risk that we couldn't see before, and that we honestly didn't care about before, because we could already spot the ones that didn't have any risk.
Do you also mitigate the risk about casualty, for example? Like what kind
not
of...
currently. Yeah, not currently. We're mostly just in property.
In prop. I saw that you will be on ITC this year, ITC 2024. So for all the audience that are going to the ITC, and just the one that unfortunately will not, but what do you have to say to that kind of to the audience of ITC? What? Yeah. Because I think you will present your demo, right?
Yes, yeah, we'll be on the demo stage, and we also have kind of like a booth near the demo stage, so you can come say hi. I'm definitely gonna hype up our demo a little bit. We want it to be very explosive and something to remember. So for the people that are carving out their schedules now, pencil it in.
Nice. So it's close to your home also, so it's a great one.
Yeah, I mean, I was born and raised in Vegas, so the fact that ITC is there, I get to visit family, I get to, hang out with all my insurance
What is
friends. It's great.
what is the best restaurant in Vegas? Give us a
Oh,
couple of tips.
it's yeah. Yeah. Well, I mean, it's so interesting because when you live in Vegas, you kind of just the strip exists, but you don't really go there. It's like an amusement park kind of. Like you make a day out of it and then you like don't visit for a couple of years. But I would say Catch at Aria. It's a seafood restaurant, like sushi restaurant, is super good. Chica at the Cosmo, I believe, is really good. I'm trying to think of things on the strip. If you really want to get out of the strip, which I don't know if anyone will ever, I like actually have time, there's like a lot of cool things to do that's like in the surrounding area. Like Area 15 is a cool like art exhibit, lots of bars, lots of nice restaurants. So would recommend that. But if you want more solid recommendations catered to you, DM me. I'm open.
Awesome. So we are much more near to the end. Is there anything else you would like to add before we wrap up? What would you like people to take away about Faura? Or
Yeah, I mean,
even, even about all the climate risk that we approach.
yeah. I mean, at the end of the day, and I think a lot about just like what this looks like, the industry is changing, but it's following a pattern, right? So like when we look at hyper personalization and diversification in insurance companies, the ones that survive are the ones that continue to adapt. And so we've seen this pattern of personalization among like life insurance has always been that, but now auto insurance with telematics, it's an extra variable that you can measure like these devices in your cars that basically price your safety and they price how you drive based off of that. It's things like that where I like property is absolutely following in their footsteps, and now the new hyper personalized variable is climate, because properties aren't changing, it's the climate around them, right? So I think there's a lot of people that are wondering, how do we like innovate in this area and adapt, and the biggest thing that I have to say is just like we're following the pattern and it's inevitable, and one of the goals of Faura is to make that transition as clean as possible and provide as much value as possible. And so that's probably the biggest thing. It's just it will all come in due time, but our goal is to make it easy.
Valkyrie, thank you very much. It was fascinating, and we'll meet you in Vegas.
Yeah, absolutely. Have a good one.